Volatility expected in Bitcoin later today as U.S. headline inflation data is expected to tick higher. Headline inflation year-over-year is expected to increase by 0.2% and end a 6-month consecutive decline, last seen in March 2024. Consensus for headline inflation year-over-year is expected to increase by 0.2% to 2.6%, the first year-on-year increase since March 2024. Bitcoin's 30-day implied volatility spiked to as high as 90% past week, and could see further volatility when U.S. inflation data is announced. The U.S. inflation report set to be released on Wednesday has the potential to stir up Bitcoin, BTC, price volatility, ending the 48-hour period of calm. It's been a whirlwind week for cryptocurrencies, with Donald Trump winning the U.S. presidential election on November 6th. As a result, the total cryptocurrency market jumped from $2.2 trillion to $3 trillion back down to approximately $2.8 trillion, according to TradingView. While Bitcoin, BTC, the largest cryptocurrency by market capitalization, touched $90,000 on November 12th just before U.S. equity markets closed. U.S. inflation data is not squashed. Per FX Street, the U.S. Consumer Price Index, CPI, due at 8:30 Eastern Time, is expected to show that the cost of living increased 2.6% year-on-year in October, having risen 2.4% in the preceding month. This would be the first year-on-year increase since March. The issue of embedded inflation is not from headline but from core inflation year-over-year. Early this year, we saw core come down from 3.9% to 3.2%. However, it turned higher in September to 3.3%, presenting a challenge to the Fed. The concern of inflation not being slayed can be shown in the U.S. yields, which have only soared since the Federal Reserve started the rate-cutting cycle with a 50 bps rate cut, followed by a further 25 bps rate cut. Since the first rate cut on September 16th, the U.S. 10-Y has jumped from 3.6% to 4.4%, with the U.S. 3-month Treasury yield trading at 4.6%, which follows the effective federal funds rate. It's suggesting that no more than 25 bps of rate cuts will occur over the next 3 months, as the current target rate is 450 to 475. So, with a spike in implied volatility and an expected increase in headline inflation YOY, could Bitcoin see a dramatic price swing later today? Implied volatility has risen. Implied volatility for options contracts expiring 1 week from today has spiked from 40% to as high as 90% due to Bitcoin's climb to $90,000. An increase of more than $20,000 since November 6th. Glassnode defines implied volatility as the market's expectation of volatility. Viewing at the money, ATM, for over time gives a normalized view of volatility expectations, which will often rise and fall with realized volatility and market sentiment. How has Bitcoin fared on previous U.S. CPI releases? Inflation data releases brought downside volatility to Bitcoin in the first quarter. It performed negatively as inflation remained almost double the inflation target. For example, Bitcoin fell as much as 7.5% on January 12th when the U.S. reported a hotter inflation figure for December. However, as the year progressed and headline inflation YOY continued to slow, this became more of a bullish event for Bitcoin, eventually registering a 6.7% price increase on July 15th as an example. As inflation slowed, the market became more efficient and produced 3 consecutive 0 to 1% price movements. Now, inflation is expected to rebound again.